A bit of a bombshell was dropped yesterday, and I think most people missed it. People on YouTube and in the media toss around this quantitative easing, and I don't really think they know what it means. And I think they use it in the broader sense of dropping rates, but that's not what quantitative easing is about. I'm going to talk about that briefly, and I'm also going to talk about today's big news and what to watch out for. And before we get into that, let's just look at the current crypto market. We still have a high amount of fear, and there's still a big spread between the actual price of Bitcoin and the fear and greed index, large spread. And when I see that, I do see opportunity, but it could go either way. So right now, let's talk about the, let's just play this little video clip of,
buffer on it. So I can't give you an exact number, but for now it's ongoing and we have ways to go.
What kind of conditions would have to happen for you to start going back to quantitative easing?
So to quantitative easing. That's a tool we tend to use when we're at the effective lower bound and we can't cut interest rates anymore. So nothing like what you're seeing in the current day. It's a different test for stopping quantitative tightening, but we would use QE going forward only in a situation when rates are at zero and we're a long way from zero now.
Okay, so let's digest that. He just said it's a tool they have when rates are already at zero, and that's not even working. So quantitative easing is not lowering of the interest rates. Quantitative easing means you're buying things like treasuries and mortgage-backed securities in order to bring down the rates of those longer-term instruments, okay? So what happened was in 2008, they did quantitative easing. The rates were already at zero. We had the mortgage meltdown. And then they started buying treasuries and mortgage-backed securities in order to keep those rates artificially low because there wasn't a lot of buyers in those markets because confidence was extraordinarily low. So they were the buyers. They put $10 trillion just about on their balance sheets. And that's just what's disclosed. Who knows what the actual number is? But they have trillions of dollars of these assets. Now, over the last couple of years, they've been selling off their assets and they've been quantitative tightening through reducing their balance sheet. Their balance sheet is still at $6 trillion. $6 trillion. And if they don't continue to sell those, they're not going to have any ammunition or firepower when the economy is actually in the dumper. So I do not see quantitative easing happening anytime soon. And people just got to stop hoping for it because it's not going to happen. Sorry to tell you that. I hope you're not mad. Don't shoot the messenger. But Jerome Powell himself just said they're not going to do that until they've already exhausted the rate option, and because they still have to reduce their balance sheet. So that is not going to happen. And you look after that news came out yesterday, if you looked and see what happened to the price of Bitcoin, it took a little bit of a jolt. We bounced under this, what I would call a new floor of floor of support. We did bounce off this and we actually came higher because the long-term implications of quantitative tightening are a stronger dollar and a stronger economy. So the economy is doing well. There's a dichotomy that's a good one. The economy is actually doing okay, and there's not broader issues in the economy. But the reason why crypto doesn't like this is because there's not a huge opportunity to lower rates, increase liquidity, and things like that. But if people have jobs and the economy is doing well, people have disposable cash. There's other places around the world that are doing quantitative easing and relaxing their monetary policy through reducing rates and things like that. And so we'll see a pump from that. But crypto has to get away from worrying about these huge macroeconomic factors so intently that every little thing is going to change where they are. I think there's a lot of fear as seen by the fear and greed index in the marketplace. And people are using any excuse to get out of crypto. They believe it's a high. Now, are we at a market top? Or are we still in a bull market? I believe there's so much bullish things going on right now that we are still in a bull market. Now that could change rapidly. You still have Bitcoin around $96,000, and there's still a lot of positive news coming out about the uses of crypto and government intervention. Just in this meeting alone, they talked about stable coins. They talked about regulating stable coins and things like that. So I don't think we've gone out of the bull market. I still think we're there. Today, very big news today, or the very big news today, and all eyes are on consumer price index. That's really one of the core CPI and consumer price index is one of the main indices or, indicators that the Fed uses to relax their monetary policy. And if it comes in as expected or strong, I wouldn't expect the Fed to make any changes to their policy in the next meeting. We're going to have to see some significant bad news in the economy for them to change their stance right now. And what he said yesterday is, we're doing okay. We don't need to reduce our monetary policy. It has worked, they're saying, and that's what we're looking at. He's going to testify again today, Jerome Powell, and around 10 a.m. So at 8:30 a.m., if you're not locked in positions or if you want to get out or in, this isn't financial advice. I'm certainly not your financial advisor, but this is a concern. This will cause volatility. If it comes in as expected, I don't expect the crypto markets to move a whole lot. If the consumer price index comes in lower, in other words, there's less inflation than expected, you can expect markets to react in kind and probably improve. And if the CPI comes in worse than expected, hold on, because there's going to be a significant volatility, probably a selling of crypto assets in the short term because of that. That might look like they would actually tighten monetary policy if consumer CPI, PPI, retail sales, if everything comes in stronger than expected, the economy is overheated and they're going to probably raise rates to slow it down. I don't see that happening. But today, like I said, big day. You've got CPI. You've got another Jerome Powell testimony in front of Congress. So if there's fireworks, expect some fireworks in the crypto markets. That's what I got. Hope you found some value in this. If you did, hit the like button. If you made it this long and you're not a subscriber, just simply put, please give me a little subscription, a little love that way. Like I said, that's all I got, and I'll see you next time.